Good morning, everyone. Welcome back. All right, so a little bit of pullback going on here. News about China. Again, it's been a long time about China. Thank you, Alex. News of rail strikes, no Christmas presents or Hanukkah presents for anybody, coal in everybody's sock. So things are gapping down a little bit. Do we have a little double top going on here? Maybe. It's a decent gap down, right under that green bar, right near that pivot. As always, we see where it ends the day. So if the gap down gets bought and whether we get a green bar, which will strongly suggest going higher. Remember, we got that big open interest that's been pinning the S&P SPX at a give or take around 4,000. Right? Like it hangs exactly there. You could see it didn't get too far away, certainly from the upside there. And so now it's down below. The question is, does it drag it back up? And from where? So just looking at where this is now in relation to this high, there's 400, there's a pivot, and just slightly below that. So on some support, you can see you can't see it there on the daily chart, but there's a pivot there on the hourly chart. You can see it on the 15-minute chart. There's a cursor moves across there, and then it doesn't bounce back up. It opens up the door to down here, which isn't, well, I guess on a short-term basis, it is significant because while it won't be breaking this major support level, the depth of retracement, if it should get all the way down there, and especially if it closes down there, would strongly suggest it's going to go through it. So right now, we've got the beginnings of a small trading range going on. And that was pretty much, after looking at everything over the weekend, was my bias that, I said, well, on a short-term basis, things might seem to be significant. I think in the grander scheme of what's happening over here, and I guess over here, nothing much is going to happen until we see something of significance. A big red bar, big green bar. We got, I think the 14th, the Fed, which is 3 weeks from now, and then options expiration. So maybe we're going to be in a holding pattern for a little while. Good for credit spreads, bad for directionals. Of course, individual stocks to look at. Futures, pulling back. And so we've talked about this a lot, over the years. Wide range bars, power bars, momentum moves. They create voids. We got to go back further here. Right? Last week was thinking, oh, maybe we can get all the way back down here. And the market held up in front of the holiday and it didn't. But now today's open here reopens that thought. There's this little congestion right there, which has almost been touched. So look, again, this would be the next obvious stopping point, down here at 39.50-ish. There's lots of support down there. So in no way do I believe we're going to get below that today, not unless some new news comes out, which provides us a very significant line in the sand. And getting back above the high seems extremely unlikely, considering, this little retest and move lower. All right. So the wide range bar scenario, what I was going to get to and stopped here. So 3,900 would be the last stopping point before a complete collapse. And that's going to be a significant point as well as, a pivot, probably open interest usually clusters around that area. And, Alex, has been Fed speakers almost on a daily basis. Most of them go off like with a yawn, and some of them a little bit paid attention to. But yeah, like a month ago, it's like, wow, look at this. Every day, some Fed speaker is going to be jawboning about something. And I was concerned about that. It's like the uncertainty, what's going to come out of their mouth. And it's like, did he talk? It was like a non-event. So it's definitely something to think about. But the economic reports that are coming are a little later in the week. So I think I think it's going to be relatively choppy, and breakdowns probably result in failures and so on. But right now, as we always do, looking to the left, I think eventually, the S&P has to work its way down here, because that's where there's going to be a significant number of traders that are going to be more willing to step up to the plate and buy a pullback. And that's going to be my bias until something of significant happens where we get some kind of a turn on a shorter time frame. So be nimble. Been saying that for a while. And markets haven't really done anything in 2 weeks. You look at the weekly chart, and wide range bar up, nothing, which is somewhat bullish. It is in a downtrend, but until proven otherwise, where it breaks below a prior week's low, everything is just noise. And that's what we've been experiencing. The daily's in an uptrend. This is in a downtrend. It's consolidating. And so that's our view of what's happening, and keeps us our expectations in alignment with what is. So now, last I looked, they zero. No, they didn't zero them out yet. 40-40 on the upside, which is pretty damn close, but it's opening down here. So while I wouldn't call that a no-brainer, I think it'll work. And down below, which is probably most likely safer, at 39.30, which is 85 by 95, not bad. You could even do 39.25. It's, but it's down here. So even if it falls down here, and it's worth waiting 5 minutes or so with the open to see if things continue to drop. But even if it comes down here, your line in the sand, or your screen point, let's put it, your strike is aligned with a significant support area, and it's going to take quite a bit for prices to work its way down there in one day. And that's a big part of the analysis here, is looking at multiple time frames, looking at average range on a day, the pattern, where's support, where's resistance, and where it appears to be always what appears to be a no-brainer credit spread. How far would it have to run to get there? And that alignment of concepts have worked out extremely well over a long period of time. All right, other markets. Already, inching down toward that low. Now it's holding for the moment. There was a deep retracement back up here, so possibly a downside shakeout, little breakdown failure action there, still within this messy trading range. But this is how something starts, as far as an attempt to make a low point. So there's a thought as far as that goes. And there's really no significant resistance because of the move down in the gap. So I guess it wouldn't be totally surprising if this did try to get back up into that area, which would be pretty much eventless on the daily chart. Maybe that is something that happens, where it rolls back over to ultimately come down here. So as we go through all of these different markets and patterns and looking for some guidance as to a stronger bias, I don't come up with one. The Dow, as we all know, has been stronger. It's reached its destination. And this is something, the flight in the ointment, or however you want to call it, as far as the market's going higher, is that here the leader is now likely to become the weaker. Can they bring up the rear, or does this drag things down? And ultimately, I don't know. But the real thing to be watching, which we all know, is interest rates and the dollar. And the 10-year is down here near this pivot. This is in an uptrend. It's pulling back. That's a pivot on a smaller time frame right there. And this could make a higher low. So you want to keep an eye on this. Yeah, there was some news about Apple, right, Alex? And you know what was I thought was kind of interesting as far as some type of a bearish view on Apple. Recently everybody, is coming out with a deal as far as some kind of, bring in business during this inflation and, we get past a rough time. It's normal. It's part of the business. And so I've been with Verizon for 25 plus years or something. And here T-Mobile is offering like incredible deals, like half the price, bring us your Verizon, whatever. And with that, here's a brand new, my wife has a Apple Pro Max, whatever. Here's a brand new phone. And if you want to, I got a Sam, you want a new Samsung phone? Here it is, brand new. So incredible deals out there, to go find them at times like this. But yeah, China lockdown, here it goes again, and blah, blah, blah. Remember a couple of years ago, all we heard was about China every other day, and the markets would go up. Then China, the markets would go down, and 3%, oh, rally time, back up again. So S&P bouncing on the 200 EMA and S&P 500. Maybe so. Maybe so, Michael. I don't look at EMAs, but everybody's got their reference points. Right? Moving averages, depending on what you look at, move around. Euro. There it is. Right at the 200 simple MA, threatening maybe to go higher. And it's right there at the pivot. And, uptrend, right, neutralized, deep retracement up there. So that looks like it's made a turn. And that's the bullish part about the broader markets, because the dollar has been what's been going up and the market's going down. And as the dollar topped out, the market's bottomed. So, this is doing nothing, right, over the wide range bar as the dollar came down. And so the question is, does this turn into an M type of a top, this coming down? Right, you need a freaking calculator for this market. All the stuff we need to look at to figure out what the hell's going to go on. Now, this is coming down to major support like interest rates. So if this flips up, euro down, interest rates up, the market's got to go down. I mean, that's the way you got to look at it, because that is the way it has been. I have a chart here. No. So here, you can see dollar up, market down, topping pattern breakdown, market up. And, if this does flip up, euro down, interest rates up, this results in a move down to where? Well, there's the prior low. Right now we're in a trading range. So we're keeping everything in perspective and not walking, around blindsided and thinking like something significant is going to happen because we heard about China. And then we got the rail thing. So there are things out there that could get things moving in a bearish alignment. And this is just a mess. Break, stay away. I'm going to say Bitcoin. Now here's another factor, another potential factor. Wide range bar down, and we go out to the monthly chart, and this has to have an effect on the markets, you would think. Now, does this become a perfect storm? Interest rates up, dollar up, euro, the euro going down, and Bitcoin cracking down here to 10,000. I think Santa runs the hell away. And so all these moving parts, set alerts, pay attention to your stocks that look great. There are some really good looking patterns out there. And we're going to see if they follow through. That's bonds. Here, yen. I want to look at the yen. Yeah, is it a retest pattern? Right? So no matter where we look, we don't really have anything decisive. This was decisive. The pullback got bought. Like on many things, it looked like, prices could tag the 20 MA or minus support. what this tells us is that institutions are aggressive. They think Christmas rally, of course, no matter, was the different parts. But history tells us that these institutions will turn on a dime. Right? They're like SOS traders today. We've got oil cracking. It's that old thing from the past, when oil went negative, right? This looks like it's really going down to this area. Remember here, it looked like it was going to happen, and then we had the turnaround. So now we've got a failed reversal. So that looks like it's going down there. That's not a good thing. And when we start talking about, we start talking about inverted yield curves, deeply inverted, and recession, and we see oil going down. I mean, the missing piece here is maybe the rails and transport's actually beginning to crack. So they're coming, lower high, this begins to crack. And you know what? At the end of the day, I believe it all turns out to be, a lot of significant day-to-day price action within, probably isn't going to mean a whole heck of a lot until the end of the year. Well, at least not until, the Fed announcement and options expiration. So again, repeating, but keep it in perspective. Silver, messy, everything's messy. What else more can I say? Yet as you look across individual stocks, there's stuff out there that looks like it's going to go up, and it looks really good. And so we'll see, does the market drag them down? What happens? And day to day, and we wait for things to line up where we have a significant opportunity for prices to trend in one direction or the other. And we just don't have that today. All yours, Dan.
Good morning. Hope everyone had a great holiday. We did a great job on Friday morning trimming inventory. There's like 4 stocks. I said, dead money. Let's just close them at small profits. And I think every one of those would have turned into a loser today. So good job. Yeah, Apple was a pattern that you could trade it up or down. You got look at all these flat MAs. If it got above, we got Thursday, the holiday. So over Wednesday's high, could have been a breakout under this low, 145. Yeah, looks like 30-minute low short, or 5 or 10 or 15-minute low. But yeah, it definitely looks lower. It's getting caught up in this China stuff, supply problems, iPhone, blah, blah, blah. Yeah, I got those in here. Yeah, they're in the news. China's signing new 10-year contracts. I'm surprised FXI is not down more on that news. Kyle Bass, he's very knowledgeable in China business relations, all that. He was on CNBC just saying that this unrest is a lot worse than people think. It's like the worst since Tiananmen Square in '89. This was one of my favorites. It's a long idea that was in the letter. Plus, we're already in a put spread in the weekly options trader. But this is a buy setup. And this Wednesday MT Live, we're talking about the turn. And you could pick up any chart you want whatsoever. And we can talk about turns and patterns. This was the start of a Climo gap and snap. This was a turn on a pro gap. This is a turn buy setup at the 20. So that's a nice setup right there. It's gapping over our entry. PDD had earnings. China stock, but gap's too big. I don't know what to do with that. But I think it's part of KWeb. KWeb gapping up. KWeb might be a day trade. Let's see what else we have here. we had Black Friday. What do they call it? Black Monday, whatever today's called. So that's helping Amazon, it looks like, and Shop. I guess that's why Shop is up. So online orders. This thing, it's a gap breakout. I just don't like the way it trades. But gap in the 644, it's a gap breakout. Yeah, now, yeah, this rail strike is back in the picture. So green in the green room gave me these three here. Yeah, that's a buy setup, sure. Yes, Cyber Monday, there you go. So the only thing that would make this one better is if we had a bottoming tail on Friday to give us a more potent reversal. But yeah, like I had a hard time finding shorts. So we have a ton of long ideas, which I'm totally fine with, because it's going to be the situation of they should only trigger on a market gap down like this if they're strong. Hold on, that's my house cleaner. 1 second. All right. Hotel Lima. It's a 1, 2, 3, but it's at resistance. Let's see if it can go sideways. Hey, ladies. All right, Caesar's here, making a turn. Nice weekly. There's FXI we looked at. Under gap's too big. Shop we talked about. AXSM is a monster gap up to $70. I don't know what to do with that. Fox A, they were, I don't know what the news was, but they mentioned them in the Wall Street Journal. That looks good. That's a breakout. Bottoming pattern. Tested twice above the 50. Target 32.33. Keep an eye on that. Tabla, big gap. This is they're doing some deal with Yahoo. You got some extra screen showing. Oh, is that why? Yeah, that's why. Yeah, so that, all right, yeah, I was showing this. Okay, yeah, thanks, thing. So now you should be able to see these even bigger. So, big gap, but nothing to do with it. Now, no cursor. I mean, which one do you want? But then then you like, I apologize. I got a brand new computer in the mail being sent to me. Yeah, but then the problem is, well, right, then you're going to see me managing the open trades and pulling up other web pages and all that. But I'll do it. So yeah, that's weird. The share screen is fine, but share the platform, it disappears. And WSM got a downgrade. I actually was watching this for a potential bottom, but now that it's gapping under this, I have no interest. Christmas gifts, no. All right, this got a downgrade also, 1230. This could have been a potential bottoming pattern, and now it's failing. So it's a consolidation and a downtrend. All right, these were three stocks that are benefiting. Excuse me. All right, so this one's given up the gain. So I have no immediate interest at all. When you happen up to 79, yeah, there's no setups here. 45. PDD. Trip, we had a beautiful short up here on the sell setup, 3-bar turn. So again, the subject of MT lie. That's what a buy and sell setup is a turn at resistance or support. But I'm watching it now as a possible retest here. Selling a put spread. Redfin bottoming pattern breakout. It broke out, and look at all these tight bars holding the low of this. And the big void. That looks great over the high. OIH we gave as a call spread and gapping down $9, so we are not going to get our credit that we're looking for. XLY potential bottoming, XLK over Wednesday's high. Then it looks like a chip shot to the 200, but I think it's going to be a long way away. Having a step one is negate today's gap down. And BBB, we're already in the ETF trader, but another bottoming pattern and pulling back to minor support here. TFX, so 1, 2, 3. Quantum, the cover of Barron's was talking about quantum mathematics, and they just listed these. So this quantum is an ETF. I just put them all here. Little bottoming pattern. That looks like a dead animal. We'll see if the article can wake it up at all. Man, this is a buy setup, a sloppy one with again Wednesday subject. This is a complex turn because there's nothing to the left, so it's building support over time. ARQQ. Let me reset the alarm. All right. IONQ was in there, but that just looks horrible. Another attempted bottoming pattern that failed. RGTI was on the list, but wow, these it looks like there was some excitement in the sector, and then reality's kicking in, similar to the EV stocks, IR had a positive Barron's article, but it's gapping down, so no interest. TAN looks good over Friday's high. Let's consolidate over time. DIN 1, 2, 3 breakdown watch. CHH. Yeah, Alex, I talked about it for like a minute. Yeah, I said 30-minute low, or just figure out your entry. But yeah, it looks lower. All right, CHH is a 1, 2, 3 lower. All right, IIPR up alarm. We have a put spread in this. So it looks good. A coup up alarm. Coup. All right, coup. I said let's try to sell out of the money puts. All right, Garmin has to get over Friday's high, and it still looks great if it does. Cool. Shop. All right, shop. It's the gap's too big. Let's get a better entry, but I like shop on all time frames. Redfin up alarm. Yeah, that's shop. Amazon up alarm, shop is good to go. Market, they're buying this breakdown for some reason that, it's only 9:31 on a Monday, but. So Redfin looks great. All right.